Hi, family. My name is Jeffrey Bass Knight. I am the wise man. Today, I'm going to drop a few nuggets of wisdom on you, and the topic is buying your first house. This is part two. Let's get started. Okay, so what we're going to talk about is part two of this video that you're looking at, how to buy your first home. We started off talking about the 4 steps that was needed to take in order to get your first home. One of the first steps was to get your finances in order. Save up an emergency fund. Now, by getting your finance in order, what I mean is for you to pay off all your debt. Be debt-free going in the door, if that's possible for you. And the second thing was to generate or create an emergency fund. Just in case something happened, God forbid, that you will be prepared for, you would have an emergency fund and you won't have to give up your new investment, your new purchase. Okay? So make sure your finances are in order to pay off all your debt, your car note, your credit card debt, get as low as possible, and then establish an emergency fund. The second thing is for you to do your homework and pick what loan that you're going to use. So let me show you some of these loans that you can get. Okay, the first loan, and this is coming from Nerd Wallet. The first type of loan is a conventional mortgage loan. And if you see here, you could, what you need to know about first-time home buyers can get a conventional home loan with as little as 3% down if the mortgage meets requirements set by Fannie Mae and Freddie Mac. And if you put at least 20% down, you won't have to pay mortgage insurance. Most lenders require a minimum credit score of 620 to qualify for a conventional loan, conventional mortgage. But a score around 740 earns you the best interest rates. Okay, so your credit score determines the interest rate that you'll receive in getting a loan, a conventional loan or any loan whatsoever. So you want to try to get your credit score up as high as you can. FHA loans. Now, the FHA loan is a go-to program for many first-time home buyers with lower credit scores. The Federal Housing Administration allows down payments as low as 3.5% for those with credit scores of 580 or higher. The FHA will insure loans for borrowers with scores as low as 500, but requires a 10% down payment for a score that is low. Mortgage insurance is required for the life of an FHA loan and cannot be canceled. The next loan will be a VA loan. Best for military, low down payment. What you need to know about that loan is it's guaranteed by the U.S. Department of Veterans Affairs. These mortgages are available to military members, veterans, and surviving spouses. If you qualify, you'll see benefits such as no minimum credit score, no down payment, or mortgage insurance, but you'll likely have to pay a VA funding fee. The next loan is a USDA loan. Now, what you need to know about that is a USDA home loan is a zero down payment mortgage for eligible rural and suburban home buyers. USDA loans are issued by the U.S. Department of Agriculture through the USDA Rural Development Guaranteed Housing Loan Program. There are income limitations, which vary by region. Applicants with credit scores of 640 or higher receive a streamlined processing. Those with scores below that must meet more stringent underwriting standards. Okay, so now those are the different types of loans that are available, and you would have to do your research and see which loan would work best for you. The next thing would be for you to get pre-approval. After you figure out what kind of loan you're going to get, find out what company you're going to use to provide you with that particular type of loan, and get yourself pre-approved. Now, pre-approval is finding out how much house you qualify for. As I explained in part one, we talked about the need to get pre-approval so you'll know what you want to look for. If you get pre-approved for $500,000, then you're able to look for $500,000 houses and below. No need to waste your time or the agent's time looking at $1 million houses. Okay, so now because you qualify for a $500,000 house doesn't mean that you have to get a $500,000 house. However, search around, take your time. This is your investment, and get the house that you want. So that way, when you're paying the mortgage at the end of the month or the beginning of the month, you won't feel bad about it. You'll be happy. You'll be doing it with a smile, because this is one of the highest or greatest investments that you could ever make. So you want to do the best you can to get the house that you want. Okay. Now, the next thing is, after you get pre-approval, which is going to be probably required by any agent that you get for them to know what to show you, then you get yourself a good agent. Research the different real estate companies in your area. Find out who's selling the most houses. And you could also dig a little bit deeper and find out what agent is doing the most selling in your area. Okay, so you got your 4 things intact. You taking care of your finances. You paid off your debt. You got your emergency fund established. The second thing was you researched, figured out what type of loan you're going to get, what type of loan you're going to get, and where you're going to get it from. The third thing is you went and you got pre-approved. You know how much house you qualify for. Now, you need to get yourself a good agent, and a good agent in this particular scenario will be someone that's going to be working for you. So you want to get a buyer's agent. The buyer's agent's fiduciary is for you, towards you. So, and you'll be well on your way once you do those things. All right. Thank you very much. And I'll see you on the next video. You can't stop me now.